So thank you very much, students. So we have over 100 join in for this session so far. And before I start, I know now there is, for whatever reason, exam was postponed and country had a difficult time. So uh, having said that, it's very important for you to rebuild Sri Lanka, right? And your family to country. So you need to stand as a professional, and your journey of getting this membership, CS Sri Lanka qualification, is really going to help you. And obviously, uh, you will have 1 or 2 subjects to complete, right? So in that, this is a very important examination. Why? After 5 years, we are transitioning to a new syllabus in another few weeks, that is CA 2030, with a very different setup. I mean, in terms of subjects, especially at strategic level, you know what are the changes that are going to come. And so for this curriculum, the ABR, Advanced Business Reporting, has not been an easy subject. There are a lot of students who have repeated this subject. And then I don't know whether I mentioned this. No, definitely. I didn't for you because last I'll start with a comment from one student who failed this subject for several times, and then when he got through the exam last paper, which is June 25, one thing he said, sir, I neglected this segment of corporate governance, risk of misstatements, ethics, sustainability, all of that, technically about 45%, and at least 40%, right? And then this time he said, I really studied those areas and then started even with those areas, and he felt that he scored really well, and then he got through the exam, right? So therefore, don't neglect this segment and do only financial reporting. This is an area where you can easily score. Therefore, this session is very much exam focused, right? It's not a very long lecture, but very powerful lecture. You can judge at the end the amount of learning and then how those learnings are translated in the exam to marks. Therefore, I wish to start with the last paper as well before I get into this case study. So I am not here to waste your time by opening the PDF and reading para by para. No, I will only extract what is critical, examinable, what questions that examiner tests, and are you ready to write your own answers with confidence, with limited time? That's the topic that we are going to discuss. I mean, that's essentially our conversation. Before that, I want to show you when I did, even you can watch my uh, the session I did CA last pre-scene. This same pre-scene, same session we did last batch, the last, webinar, CA. Then I emphasize students, look here, again, same message I pass to them. This is very important. And you need to prepare for question like this. You can watch the webinar if you are preparing for papers. It's very good to look at the last paper as well, especially last 3-4 papers. Why? There was a syllabus change also in the middle. Some of you may not be aware. Some of you may not be aware that you can take study text chapters as supplement to the exam as open book. But is it really required? That's a different conversation. In my view, no, right? It's all matter of limited time and writing answer confidently. So last time I told students, please, 25% on risk of misstatement, possible questions to come, telco case study, STL or something like that. So I told students, look here, there's a greater chance the way pre-scene is set up, the questions to come from risk of misstatement. And we prepared for some question as well. And if you look at the unseen, examiner has straight away given few points where students can easily convert with the pre-seen knowledge and the unseen and identify risk of misstatement. And I have repeatedly told students this is not an auditing paper as the syllabus changed 2 or 3 years before, right? There was an interim syllabus revision. There are very clearly, this is a paper for CFO. The way CFO looks at risk. And then to that matter, the new syllabus has a totally new paper on risk, right? Risk and governance, totally new paper. And those who are practicing, there is auditing paper. So again, this ABR is the same, right? From a risk perspective. And I mean, this is, if you really look at new syllabus, this is much, I mean, this 40% has become 100% in a lot of other areas expanded. Now, this paper, risk of misstatement, don't write an auditing answer. As a CFO, how do you see risk? Based on the sum of these can come from business risk or directly from the inherent risk factors that this is likely to result in a misstatement. So therefore, examiner has even mentioned directly the risks you have to write from a CFO's perspective, right? See, as the CFO, the way CFO looks at the action verb is evaluate, where you exercise your judgment and write risk 10 marks. Very easily you can get this 10 marks, and we practice writing answers. And unseen clearly gave some direct points to convert this, 5 points to get 10 marks. That is how 10 came here. The other thing I really advise students, look here, S1 and S2 is the most hot topic now, because 25 from this year only for top 100, these two standards becomes mandatory. Then I emphasize them, the possible risk, and I showed the learning outcome and told the governance is likely to be tested out of S1 and S2. Why? Because this paper has a segment on corporate governance. So this is the question, evaluate the composition. Sorry, that is not here. There is another place in the paper. They have tested the S1 and S2 aspect, the board of directors responsibility. The other area, of course, very easy. I mean, all the past papers, if you look at, they either ask about the board of directors. These are, in my view, basic corporate governance question, not advanced question, right? So to comment about the composition of the board, or now in this case, you have to comment on audit and risk committee of the company. So this is what examiner tested in the previous paper, how it could be for your pre-scene, right? So the way this lecture is structured, I mean, many questions, I will show you different possibilities of which we can easily say which one has the highest possibility, but it's not about guesswork, right? Because right now you should be able to answer any area from the syllabus, right? Having said that, this session will really help you to get into the most critical aspects of the pre-scene and move on. So December 25 pre-scene. Can you answer these questions, right? See one by one. So I have put 8 questions here, 9 questions. We can add more questions. Actually, there's another section in corporate governance. I have added several other questions as well. So like the last exam paper, the difference in the last paper, examiner directly asks, evaluate the risk of misstatement. Now, this question can be slightly modified like this, and it is actually there in the yellow. I want to show you that as well. Now, how examiner set the paper? This 25%. Now, you don't waste your time. If exam is in 2 days, the main document that you need to look at to see what question can come. And usually in the last paper, another hint I am giving you, anything which is not tested also likely to come, because usually in the exam lifetime cycle, the all areas are tested, right? And some areas are repeatedly tested because they are core areas of the syllabus. So 25% risk of misstatement. These are top 3 LOs where examiner will select one of these to test. And last time examiner selected this action verb evaluate, but directly evaluate the risk of misstatement, only this part, right? But if you look at the full LO, also connect, because this is a risk paper, CFO's perspective. The CFO usually talks not just auditing language, not just in auditing language, but in business language. So what are the business risks, right? So the learning outcome says what are the significant business risks that will result in risk of misstatement. Now, if the question is rephrased from previous paper to now in the same LO, what is your answer? Then you need to really focus on business risk in the case study that is connecting to the risk of misstatement, right? And these are theory type question, right? The action verb demonstrate. Demonstrate means basic one. These are not advanced. Evaluate is a advanced learning outcome, right? So these type of questions, I mean, we can't say will not come, but that is where you need to have very good knowledge theoretically, right, about when it comes to ROM, right? Either in any of the answers you are writing, one is due to IRF, inherent risk factors, or due to control risks. And this is wrong. So, and then if you look at the last exam paper, now why something is inherent risk factors, you can apply this framework to CUMS, I say, TCUMS. So anything that you see under this, you can actually describe as a inherent risk. What are two C's? So complexity, right? Now you see in exam when you write an answer, these words becomes critical, complex, something complex. Something has changed. For example, the revenue recognition practice has changed. The moment it is a change, the possibility of risk is high. So that's another reason, another IRF factors, right? Change. And then U is uncertainty, right? Uncertainty associated with valuation. And M is very common even in your case study, that is management bias. Whenever there is a account balance that involves bias, for example, fair valuation of investment property, and whenever there is account balance that involves subjectivity in deciding discounting factor for impairments, things like that. Now, that framework, very important to work in your mind. From this perspective, the last paper, if you look at in the, I showed you examiners, the questions, the previous paper. Anyway, let's go to your paper now. So now I have, I showed you questions that I am covering, right? These questions, if I show you again, the first one, which I explained to you now, evaluate significant business risks that results in misstatement. So your answer, you need to first begins with business risk and say how it connects to financial statement. Now I'm going to show you several such risks which you can now itself prepare and practice. The other question that has a possibility, a big section of your syllabus for this 25% weightage is COSO framework, internal control framework. How do you apply COSO framework for this case study? If examiner separately asks how control and how do you apply, how do you evaluate control environment, risk assessment, right? Control activities, information system monitoring. So the COSO framework, how you apply, we are going to discuss. And then if control environment separately comes, what's the answer? Another possible area for your question is fraud risk, because there are many indications are given that the fraud risk is very high, especially in revenue recognition, billing systems, the hospital channeling and all of that we will discuss. So fraud risk assessment, if you have been asked to do, you have been asked to do a fraud risk assessment, outline the approach you do this. What are the anti-fraud controls that you are going to recommend? Right? Another question specifically with the pre-seen information, what is the impact of ITGC on the overall risk assessment, right, relating to reliability of financial statements? So why I am saying reliability of financial reporting, when it comes to COSO framework, the main objective for financial statement is reporting objectives, right? And then this is interesting, advice on structuring risk and control responsibilities using three lines model. And then what questions can come from S1 and S2 standard? We can think about several questions. Another area is section how audit committee and CFO communicate, right? Significant risk. qualitative aspects of financial reporting, significant difficulties. So these are really examinable topics, right, relating to those learning outcomes. And if you look at this set of question is 25% weightage, and then there is another 15% weightage that is both from corporate governance and non-financial reporting. That is where this 1 and S2 has a major role when it comes to 2025. Right, as the session goes on, if you have any questions as we discuss, please put those questions to the chat. And now we will go into these questions. Before I go in, so I am starting the first question out of 25%. We are talking business risk and ROM. That's our first discussion. So before I get in, I did my basic work before this pre-scene by having discussion with finance people in several hospitals, going through the annual reports to really see what are the business risks, what are the risks that matters to CFO. Right? And after CFO, obviously it matters to auditor. That is why in your syllabus there is a topic, right? In your syllabus there is a topic called those charged with governance. What matters to be discussed with those charged with governance, right? So hold on. Yeah, so definitely I am covering S1 and S2 possible areas as well. Now, in my question list, if you remember, there was last question, the communication between audit committee and the external auditor. Oh, that's this external auditor communicate with TCWG, those charged with governance. In that, there is a section about risk. Therefore, if those risks are significant, if auditor decide that there is a significant risk, auditor reports that risk in auditor's report, and that is called CAM, key audit matter. Usually, if something is a key audit matter, that is a significant risk from audit perspective. And obviously, if it is significant from audit perspective, it has to be significant to CFO. Even in the last paper, I told students, look here, in any telco company, if you look at the audit report, the auditors talk about as a CAM, key audit matter, under the banner of significant risk, revenue recognition. Now here, I am showing you two hospitals, Navalok and Durdens, both being listed company. One significant risk that you can definitely write, one CAM, because then what is CAM? You have to understand, I told you CAM is originating from communication, which we call communication with those charged with governance. CAM arises from the most significant matters that external auditor communicates. See the word most significant. Right? Now this CAM, revenue recognition. So one answer you can definitely target in your examination, that why generally, inherently in hospital, revenue recognition is risk. This explanation, if you look at a telco in the previous paper, we told why, I told you inherent risk factors. You can use the word complexity, right? Large volume of transaction processed through number of systems, and the timing of recognition and judgment in applying revenue recognition 5-step process. Therefore, there is inherently a chance that revenue may not be completely recorded in the correct period. The answer we can write to telco. When it comes to hospital, how do you change that answer slightly? And in addition, can you pick up some information from the pre-scene and connect to the answer and write? Brilliant, you will get marks. So what can you write in generally in hospital? You can say, this is what auditors have said, right? Why it is significant. You can see how it is worded. Given the significance of the total value and number of transactions, that means they are talking about volume, large volume of transactions that are being processed, and sometimes the judgments are involved, and timing of recognition, especially if you look at from a cutoff perspective. Now, if the treatment is going on at the month end, they have to recognize revenue to that level, like the hotel recognize occupancy. So how do you recognize the medicine issued up to that point? those involve some judgment. That is why, due to the large volume and judgment involved, revenue recognition is inherently higher risk, even in hospital. In addition, pick up the information from the case study. The case study has clearly given high risk where there is an issue in integrating their booking system with the revenue, and there is a chance that some of the bookings, even the cash may not be collected. So those particular information in the pre-scene I'll show you. So when you write that answer, I mean, you can add the information from the case. So what I recommend, you take one page and write this answer to my first question. What are the business risks that could result in risk of misstatement? Number one, revenue recognition completeness. You can add this generic word like auditors use. I'll show you Durden's, the same word in maybe same auditor. Right. This is, yeah, there is now. Yeah, this is the other report, revenue recognition. Here you can see, given the significance of the same wording, right? Number of transaction, judgment involved in timing of the recognition. And here they say reliance on IT systems for revenue recognition. This is significant, right? So likewise, so we will, I'll add the information from the, still I am trying to explain to you the business risk, right? Now, remember fraud risk in revenue can be a business risk. Fraud risk is a business risk, right? Will it impact financial? Yes. If there are possibilities for fake bookings in the systems and doctor consults and hospital collect no money, that is a fraud risk and cash leakage. The same can impact the occurrence assertion revenue, completeness assertion revenue, right, and cash collection. That is why fraud risk can be described as a business risk that is impacting financial statements as well. Secondly, you can also talk about revenue recognition completeness due to these integration issues, the possibility that unless there are manual reconciliations, the revenue may not be completely recognized. Those answers you can write under revenue recognition. Then I am trying to explain to you other type of business risks which are common to hospitals and how those can be connected to connected as a business risk. Now this is actual what I'm talking. These are from actual reports of the company to really understand what are business risks. Now here, one of the biggest risks is clinical and patient safety risk, failure to deliver high quality to our patients, the reputational risk, legal risk. Now, can it impact financial statements? Yes, because this is one of the major risks in hospitals, right? Now, if there is a litigation, say incorrect medicine given, now your case study, I will come to case study information, right, in a little while. The most critical information, how you connect to the answer. Before that, I'm giving you a general risk universe of a hospital to understand these are the business risks. So, this one, if there is litigations, major event like that, should it be disclosed as a contingent liability? If there is a case already filed, should we recognize a provision? That way. And your case study talks about their hospital system they are going to upgrade. Investment. There is one paragraph in the case study. So imagine that project, they want to raise funds now. They have said the requirement also. Sometimes they might take a loan, and that loan can create, because there's a pressure to get a loan, you need to ensure financial statements are good, and that leads to management bias where fraudulent financial reporting can kick in. That's why I told you fraud risk can be a separate area. There is a chapter in your study text, fraud risk factors. Thoroughly understand the fraud triangle, two categories of fraud, and how you map indicators. I'll touch that point as well. Getting back to my original point on the clinical and patient safety, as we discussed, technical obsolescence is where when you replace the new technology, how is the impairment of existing assets, the property, plant and equipment, or any intangibles that is classified in terms of IT systems. That is the area generally you can look at. And then cyber risk is prominently given in your pre-scene. I mean, one of the reasons they say this is outdated patch management not done. So imagine in a hospital if there is a cyber attack, and this happens in national NST's hospital in UK, for example, when there was a cyber attack, how the even operations, everything came to a standstill. Imagine the impact. So if there is such a issue, right? If there is such an issue, definitely. Now the question is, cyber attack. Can somebody tell me how it is impacting financial statements? Interesting question that tests your skepticism. So another skill you need to have is skepticism, right? Cyber, will it connect to financials? Now that also tests your technical knowledge on this subject, ROM. Yeah, very good. So one student, Samira Sirivardhan, right, has answered. Yeah, overall FS. I'm happy about your answer because then you technically know ROM can be analyzed at an assertion level or financial statement level. Now, imagine due to a cyber risk, cyber terrorists attacked your website, and through website they have access to ERP and they erased all the data. And you can't run some of your key reports. So then what is the impact? The impact is significant, the pervasive impact. Many areas of financial statements can be impacted. When the information system is affected, information system feed some critical information for financial reporting, and that information is not going to be there, or you need to reconstruct. As a result, there is a overall financial statement risk. Then if there is a corporate governance question on cyber governance, how do you write your answer quickly? So likewise, you need to be prepared to answer any question, right? So I'm sharing the document one student is asking, definitely yes. And there are more areas to go. Now, this is generally risk in hospitals, right? And environmental risk is another big topic. That's where sustainability also comes in. There, specifically, your case study talks about disposal of waste. And they say this risk is high in Kandy, and there are two branches, right? Now, see, this is actual company risk arising from improper medical waste disposal, emission energy use, non-compliance with environmental law. This is deadly. Now, if there is a non-compliance with environmental law, imagine if environment say you can't operate here, it can even affect going concern, right? Because if that is, I mean, it's unlikely to happen in a larger hospital, but practically, technically possible. So, but in addition, usually environmental risk also can give rise to contingent liabilities or provisions. And in the worst case scenario, that is impacting operational existence. So those are the risks. And then I also want you to look at, I told you the syllabus when it was changed somewhere in 2023, especially this risk segment, they added a new learning outcome that is yet to be tested. Uh, the how you structure roles and responsibility for risk using three lines model as given as example, given as a supplementary reading also in your supplement book. Now, most of the companies use three lines model. This defense is wrong now. It's called, the latest model is called three lines model, right? Now, even revenue, if you want to apply three lines model, the one who is billing, facing the customer, right, has to ensure that there is proper check is being done, right? And you collect the money and issue the uh, appointment, right? So that is first line. Those who are responsible directly to deal with customer, they have to manage the risk first line. The second line is risk management and other parties who are performing check-in. Sometimes finance also can be in the second line. Remember, third line has to be only one. That is independent internal audit, which reports to an audit committee. If first, second both fail, the second line will ensure, has to ensure that, there is adequate monitoring process to deal with the risk. So three-line model also important when you write an answer. Now, this is an example of one of the hospital. See how internal auditor directly reports to audit committee as the third line, right? And here there can be a risk committee somewhere. There is executive, it doesn't show a risk committee separately, right? Yeah, sorry, there is a risk management committee, right? So this can play a second line role, right? The first line is those who are directly doing the business that comes under, various now, those who are handling the pharmacy operation, right? And the various departments, they directly do the services, right? So they are the first line. Now, pre-seen questions, right? Now, what are the other business risks? Now, for your case study, please make a note. What are the business risks you want to prioritize when you go through the accounts? Okay, you can use the chat. Let's see your answers now. Yeah? So what are the business risks that you want to, can you give me a list, say 5 items that you want to discuss as business risk impact in financials? Remember, reputational risk you can write, but you have to write in a way those business risks that can impact my balance sheet and P&L, my financial statements. Now, if you just put reputational risk, you have to think how it connects. Huh? So the connectivity has to be established. Now, note this information. Number one, fraud risk factors. Now, the fraud risk, in my view, is the biggest one that you may write. Why? If I explain to you, please make a quick note on this. I'm also answering the next question, right? The next question, I have asked the question, what is your approach? Please write down, what is your approach to develop or undertake fraud risk assessment, right? That question is given. Right, now, please make a note. I'm answering this question now. I'm answering 2 questions now, right? One is when you write risk of misstatement or business risk, you can generally talk about fraud risk, right? And in this case study, you may write fraud risk as a overall financial statement risk as well as, if you want, you can also write fraud risk relating to revenue recognition, because we know there is a rebuttable presumption that every company, there is a risk of fraud unless you rebut that is not there. That's how usually auditors look. I told you this is a CFO perspective, but even a CFO knows that revenue is a more susceptible area for risk, right? Now I am asking answers from the students. They say reputational risk, deferred tax. I always recommend, always start with the risk where you can connect to the case study information. The chances of getting marks are very high. While deferred tax is there in the balance sheet, can be there, I'm sure it was there. But why don't you use the case study information to come up with a very sound answer, right? Now, why I am saying overall financial statement level risk, there is one section in the case study, I think page number 9. Just check. They say that a lot of things are going, there are a lot of adverse economic environment where the number of patients, the occupancy dropped, and then competition is intense and substandard material available, and there is one place they say overall profitability dropped and business is bit struggling. So which means if I apply the fraud triangle, that there is a pressure, right? Pressure arising from external environment, and right what I told, which is in the case study. Pressure from external environment, right? Or macro environment in terms of uh, customer base, the number of bookings and appointments and all of that. And then, so those information create a pressure, and also, right, they want to get funding from the bank. They are looking for funds. And then there is not only pressure, you can even apply incentive in the fraud triangle, that there is an incentive for them to improve profitability in this pressure environment. The other fraud factor you can write from the case study is revenue, because due to two reasons. One is weak IT general control. I have a separate slide explaining ITGC in the case study, because they say the audit trails are not active, people can go and the access rights are not properly managed. Remember, when ITGC are weak, you cannot rely on system application controls. And the case study clearly says there is a possibility for fraud. The booking done, cash not collected, that is specifically mentioned. So it relates to revenue recognition, cash, both misappropriation of assets and the fraudulent financial reporting. Did you notice what I said? I said two things. Let me repeat. Misappropriation of asset, one segment of fraud. The other segment is called fraudulent financial reporting. So those two you need to be mindful. So if you're asked to do a fraud risk assessment for this company, what are the balances in the balance sheet that are susceptible to fraud risk, right? So that also answer you have to think. So this is one answer that we can write. Business risk, fraud risk. Fraud risk you can write in both ways. Nobody can challenge this answer. Technically sound, right? So then likewise, what are the other business risks? If you want to talk about cyber risk, cyber we spoke, right? And we again describe cyber risk as what risk? Overall financial statement risk. What else you can write? Then I spoke about from the actual case, I mean, this company's annual report when I showed you clinical risk, litigations, how it is impacting. And I also spoke about asset impairment, the technology change, business risk, right? Technology change and how this leads to impairment of assets. These are top risks that you can really think about. Then I spoke about clinical risk, how it is resulting in provision and litigation. Then we spoke about environmental risk, the waste disposal, unauthorized manner. So this can, I said, even affect going concern, that's very extreme, if not provision or contingent liabilities. So likewise, you can think about it. And then we are missing revenue recognition, not only as a fraud risk, you can also write separately, this is a fraud, right? Revenue recognition, inherent risk, right? That is due to, remember the wording, large volume of transactions that are handled, judgment involved, IT systems, and what assertions can be affected? Completeness of revenue, cutoff, period of recognition, the judgment involved, and so on. Then you can also speak about inventory valuation if you want to, because the case study talks about another one, right? But that can be a direct risk of misstatement, right? So likewise. And then substandard material, all of that, if you want to connect, you can connect indirectly, but these are enough information. The other thing I told you, right, is the fraud risk assessment, right? So I told you I'm answering two questions at the same time. One I finished, right? So what we finished was risk. Now, if you are asked to do a fraud risk assessment, there is a chapter in your study text. Please understand. First, you need to understand two categories of fraud, right? Misappropriation of assets, that means theft of asset. Other one is called fraudulent financial reporting. Right? FFR. So in this case study, can you use the chat and tell me what are the assets where the fraudulent financial reporting risk? Sorry, the Misappropriation of assets is high. Let's see how good you are. Very quickly, I need your answer. Cash, good. I know because it's very clearly given in the case study. And normally, again, you can analyze what proportion of cash and can the credit card payments be diverted? Very good. Now the student says inventory. Because case study talks about this, there is a possibility some of the inventory which are being issued to operations, ongoing things, this is not updated. This is not connected to billing. Those information in the pre-scene, right? And there may be expensive items, medical equipment subject to movable items, but these two are clearly given in the pre-scene, right? Then fraudulent financial reporting is financial statement related frauds. And remember, management overriding control is main driver of this. So remember these words when you write answers, they are very useful. Possibility of management overriding controls. Now, under both category, you will have to look at the fraud triangle and identify indicators, right? So what are the fraud risk indicators? Incentive. I told you if they are going to take a bank loan, there is incentive to manipulate. And then there is definitely in this case study, pressure factors. They are largely pressure arising from the external environment. And then opportunity. Can somebody tell me what are the opportunities for the fraud given in this company? The main opportunity is weak ITGC, lack of integration, and so on. And can you also talk about attitude and rationalization in this case study? So attitude or rationalization largely deals with unethical practices, right? That case study is right now silent, right? So yeah, so those are opportunities. So this area you need to really go through when you are preparing. And now, if I go back to other areas, what? Right. Now, what we discussed was this, and also we discussed this. You have been asked to undertake a fraud risk assessment, outline your approach. Our approach is to use fraud triangle, fraud risk indicators, right? Rebuttable presumption of revenue recognition, all that jargon you can use. Management override of control, word you have to remember in every company, these two risks are common, management override of control and revenue recognition. In addition, you can use then what are anti-fraud controls? Can you use the chat and mention what are the anti-fraud typical answers that you can write? Anti-fraud. Remember, anti-fraud begins with control environment when you recruit people to do the background check-in and recruit, starting point. And then when it comes to the controls, it's very important to ensure segregation of duties and robustness of system control ITGC application. And most powerful deterrent of fraud as anti-fraud is whistleblowing. Somebody blow the whistle, right? But you need to ensure whistleblowing process is effective. If you look at your corporate governance code, there are whistleblowing things, but you don't need to look at any book. You have to ensure that there is independent whistleblowing mechanism where anonymity, where somebody ensure that sender's anonymity is respected, and then that is handled independently without any retaliation, right? So those are the main principle. Then This is another big question from the case study, ITGC. Evaluate the impact of ITGC on the overall risk assessment. I spoke about that. So let's go to those questions as well now. And COSO framework. I think, sorry, I missed that. No, second major question is apply COSO framework. Now, this is COSO framework 17 principles. Students, you need to be really very thorough with this. So, first thing in the COSO framework, remember these three objectives. It connects to because I was using the extreme corner. See these three objectives. So I hope you remember, right? These three you need to really remember. I can't draw if I right. So those three. So what are the three? Operation, effectiveness and efficiency of operation, reliability of financial reporting, other one is compliance. So if there is an exam question for you to evaluate the control environment, what can you gather from this pre-scene? Control environment. So do they talk about, remember, control environment connects to corporate governance. So I have another segment to talk about the board of directors, the audit committee, risk management, internal control. Are you happy? So one segment of control environment is this independent board of directors oversight. So therefore control environment here talks about corporate governance. Integrity and ethical values, case study is silent but unseen examiner may give you. Structure reporting lines, authority responsibilities. This is where you can apply 3 lines model to properly structure governance responsibility. I explained to you who is first line, second line, third line, right? The other thing very important is to make sure that company attract competent people, and if case study talks about people are leaving, all of that indicates problems. And finally, if there is a problem, who is accountable? Again, that can be a part of 3 lines, right? For example, if there is any problem in finance, the accountability lies with the CFO. Likewise. Now, risk assessment, we have already discussed in this case study what are the business risks. So how did we identify? Because business risks start with the objective setting of the company, what risks are impacting, and specifically fraud risks need to be considered, which we have already discussed. And if there is any significant change to the IRP, I think that is relevant to your case study because they are going to change the systems or technology. Then next part is very relevant to your case study, control activities. Now, do you know what are control activities? This is where authorization, segregation of duties, right? Performance review, business performance reviews, things like that are, and obviously IT controls, right? Application controls. This one is general IT control. It's extremely important. I have a separate question to you. And controls, these controls are actually deployed through policies and procedure. You need to have a good understanding if COSO is tested, one of these. And then what do you think about IT system of this company? There is major risk when it comes to integration risk. As a result, the quality of information is questionable. Internal controls are questionable. And then this case study, the monitoring, usually monitoring means somebody making sure controls are working, controls are effective. And usually it's done by internal audit, right? So it can be done as an ongoing thing or it can be done as a separate study, right? At the end. And after that, if there are deficiency, weaknesses, that should be evaluated. Now, your case study clearly talked about this in one of the para, that there are internal control weaknesses, external audit has highlighted. So then what actions they have taken. So this area is very relevant to your case study. That's why I am telling you one of the question in the exam. So I told you today, write 1 page answer on business ROM, another page answer on applying COSO framework, right? So you need to, more you write, දැන් ගොඩක් theory බලලා පොත් කියවලා ගොඩක් දේවල් කරන්න පුළුවන්. This time what is more effective is If you can write answers with the time set, that is directly you are getting ready for the exam, right? And that type of student has a much, much higher chance of passing, not only passing, even to get the prize. Now, I'm giving you, okay, before I get into this, I need to show you this critical information in the case study that relevant to our answers, right? So I have done 2 slides, critical information from this case study. This history and all, I mean, that we will come to from the start. They have 3 directors appointed, 3 independent directors appointed. All that history is there. Sustainability focus, internal control. So for me, critical pages, page number 7 to 8, integration of key function, right? There are problems, finance, inventory, procurement, patient channel manage channeling system. This is the most critical one in page number 7. See, fraud risk. Fraud risk is very high due to manual journal entries being recorded without proper review, missing accrual, unadjusted balances, and incomplete financial statement. That is why overall financial statement risk is very high due to this integration risk, manual journal entries. Concern raised by the external auditor specifically talks about gaps in transaction login, user authentication, audit trail, right? Particularly front desk and online appointment booking module. These weaknesses create gaps where appointment could be recorded without correctly matching the income, or where staff might bypass means override the normal approval check-in process. This creates a high risk of cash loss or even the possibility of fund. This is where you can actually connect exam question to fraud. That's why I discussed those points. In addition, this talks a lot about ITGC. ITGC is really big, and together with that, cyber risk. So, ERP system without significant updates. No updates means more vulnerable for cyber risk. The lack of regular updates means the critical security patches. See, the security patches are not done. Compliance related enhancements are not done. User interface enhancement not done. The cyber risk is very high. So if there is another exam question, what is board of directors role on cyber governance? What is the page number you can answer? So what is your answer? Right? Yeah, so I am sharing this PowerPoint, right? And whatever other question, please use the chat. And at the end, we can clarify all of this question. And I told you, in addition to this, another critical information in the case study, the cyber risk continues to here. Real-time integration. See the payment gateway. These are also business risk. Customers upshot, the confirmation of online credit card frauds, right? Because this card gateway is not connected. So can somebody see due to cyber risk again use this information, credit card information? Lack of integration point, and this point is a very critical information in the case study. Consumable, I hope you have seen this information, right? Inventories, consumable, and pharmaceutical issued during the patient's appointment are not all automatically captured in the system real time. So, which means there is a chance of that being missing, and that stock level may not be updated, revenue recognition may be impacted. So, very clearly, you can link this like we already discussed. The other risk is manual intervention. This is overall financial statement risk. Why this is overall financial statement risk? Please write up. Because the entire process of constructing accounts is in Excel, right? So when that is in Excel, which means your general ledger, trial balance, FS are not connected. You are constructing financial statements manually with manual journal entry also being included. High risk, overall financial statement risk. Manual intervention, spreadsheet, offline approval, all of that. And then about audit committee chaired by Bhuvanaka Silva. Bhuvanaka Silva may be good, but we have to ask one question about him. Let's discuss under corporate governance section. And then Dr. Shalukya Pereira is an independent director. So audit committee has only these two. But corporate governance listing rule, everybody says how many members in the audit committee at least? Three. Then now Sunil was independent director. Now he is not independent. Why? Sunil has been subsequently appointed as a chief executive officer in Kandy Hospital. So he is not independent. So these information that you can gather easily from the pre-scene. Business risk, we discussed the substandard medicine. Talent risk also there, right? Those are business risk. Regulatory risk. So this part we discussed. Really, again, regulatory risk can impact financial statement. And then, in addition, another point you have to note that this is very relevant from consolidation. Obviously, there will be acquisition, right? Then remember, examiner can ask risk of misstatement in consolidated financial statement as well. Please make a note. If there is a question to answer risk of misstatement in consolidated financial statement, specifically answers goodwill, fair valuation of assets and liability. Those are standard answers that you should remember and connect with the preceding information. Right, so this part I have already covered, risk of misstatement in the last paper. Then moving on, COSO framework we discussed. And then I told you another area is ITGC, right? If you happen to evaluate ITGC, can you read these points? I have categorized this under bullet points and from the pre-scene, right? Inadequate transaction login and audit trail, right? That's a high risk. If there is no trail, audit trail, the fraud risk, especially detective ability is less. Audit trails are weak, you can't trace. So undetected errors, frauds, poor use of authentication and access control, delay in payment processing and reconciliation. So these together, I am asking what is the impact on financial statement from a ITGC perspective, revenue, cash, completeness, high risk of cash losses, even the possibility of funds, that's mentioned in the case study. Then integration risks. That's the next part that you have to look at, overall financial statement point of view. These modules are not integrated, right? Especially inventory modules, channel in billing, consumable pharmaceutical. So then what is the risk? The overall reliability of financial statement due to significant manual intervention, right? Month and year end reconciliations are spreadsheets, so that part also we discuss. Then my other question to you, if there is exam question, role of the board on cyber security. Can some of you give me the answer? What are you going to write? Yeah, recording of this session should be available, right? CA will make this available. Yeah, so one student says Cisco, sorry, not Cisco, the Chief Information Security Officer. Yeah, but I am asking board of directors role. Like, okay, board can appoint. Is that enough? No, remember, if cyber risk is tested, I mean, examiner can test a very valuable page and you need to understand this information. See this. This is the role of the board. If I put action verb outline, outline is to give a summary of something. So the first thing is board have to have a process of identifying the company's business model, how it connects through IT devices within and outside, how their network is getting exposed to the third party, and consequently what type of cyber risks that are applicable. For example, you are exposed through the website to the outside patients channeling, right? And maybe if there are other APIs or connectivity given to suppliers, so you need to understand that exposure. So that is the first part where the board is responsible process, to have a process. Our board is not doing, but board should have a process, and that process should connect to risk management process. The next is, some of you told, CISO you have to appoint, and that CIO should have the expertise, and then not only that, his job should be to implement cybersecurity risk management policy. So please note the word cybersecurity risk management policy, right? And that policy has to be approved by the board. And then the policy මොනවද තියෙන්න ඕනේ? Policy need to have a risk management process. Especially this word is very important in cyber context. Incident reporting system, vendor management system, right? If there is an attack, how quickly you can recover, disaster recovery plan, recovery time objective within how many days, critical system you can up, and the governance structure to monitor whether this is effective. What is the role of auditors, right? Internal audit. And have you taken cybersecurity insurance? Very important. Cyber insurance are there today. Very valuable slide when it comes to cyber risk, the board responsibility. And then the board should allocate time at board agenda to discuss cybersecurity risk. And then finally, some board should ensure that this process works. That is where board get the assurance, effectiveness of cybersecurity. Now, always they use the word cybersecurity risk management. This is where the phishing and ransomware, all these attacks can come, right? And then there is a cybersecurity checklist. Good news is this is in the open book, but you must read before the exam, and page number 42 to 43. What is the book? Corporate Governance Code, right? Very, very important page. And now, cyber risk in this case study we discussed. Now let's come to corporate governance a little bit. What type of questions that we can expect from corporate governance and non-financial reporting sustainability? Yeah, so corporate governance, if I tell you from a syllabus perspective, general questions that can come, LOs, these LO number also given. If they ask effectiveness of the board in terms of discharging board responsibility, please refer to corporate governance code. The first section of corporate governance code has this, especially the board is responsible. That has whole list of things, including even cybersecurity means first, board is responsible for the business strategy. Number one, succession planning of the CEO and the management. Number two, the risk management and internal control, ethics, organization, ESG. So these are typically areas board is responsible. And then if there is exam question about performance and conformance role of the board, very, very important, and some of you may not have studied this properly, right? So this is also a learning outcome in your syllabus called functions of the board, right? Now this diagram in page number 820 of the study text is a very, very powerful diagram that tells you performance and conformance role of the board. So if you look at, the board has a role looking at the future. How are we going to strategize? By looking at the external environment and future related. So it is outward looking and looking ahead, and that is the strategy formulation task of the board. And then along with the strategy, they need to have a policy framework within which they work out their strategy. That is where policy again, future focus and inward looking. This is called, this segment is the performance part of the board. Performance. You have to make money, no? Then while they engage or they achieve their targets, right? They work on the mission and achieve their financial targets. How do we make sure they are on the right track? They don't do illegal business, no fraud, risk are managed. Management is running the business within the policy framework set by the board. Somebody has to watch That is this whole committees and meetings, audit committee, risk committee, nomination committee, related party review committee. What they do is on a daily basis internally monitoring and supervising, and finally to the external world they have to tell how the company was governed, and that is accountability. Now this is Bob Tricker's analysis of board functions, which is also in the study text. Very powerful framework, although they are in the syllabus, not yet tested, right? The board functions in terms of these four. But if I ask you this question, you should be able to write an answer. Whether board has done in this company, are you happy about strategy? Are they thinking about future? Yes, I think, because they talk about new technology that is to come, and they have spent a lot of money on that. So they are strategizing, and because of the problem in pharmaceutical section, the supply chain, they are going to acquire another company. That is again a corporate level strategy, right? And there is audit committee, but some areas they are weak. So you can really use this framework to analyze, right? Then the other area I want to emphasize, listing rule. This is when it comes to a listed company, PLC, you need to be aware that new listing rules, section 9 has come, and that listing rule has all of these areas are covered, especially some new areas. Fitness and proprietary of directors. If director is after 70 age, even the independence is being questioned. The fitness is in question. Those are new topics that you need to be aware. And there are policies that board has to have, set of policies. Especially I have summarized here policies. There are 12 areas where policies are required. Anti-bribery corruption. These acts, they are relevant in Sri Lanka now. It's affecting private sector organization. Do you know how anti-bribery corruption act is impacting? Right? And then sustainability. Is there a policy on ESG? Is there a policy on risk management? Right? So these are covered. Under listing rules, the may summary එකේ තියෙන listing rule වල තියෙන main requirements. Fitness and proprietary of directors and CEO. Are they fit to be directors, right? How do you ensure that they are, fit as legally, they haven't done anything illegal, and they are health? Those things also matters. So these are requirements of listing rule. Now, this function of the board we discuss, and committees. Now let's come to healthcare company. Evaluate the effectiveness of audit committee of healthcare. So how do you evaluate the effectiveness of healthcare audit committee? So now I want your answer. Let's see how well you have analyzed the case study. What is your comment on, I have asked 3 questions here. Evaluate the effectiveness of audit committee of healthcare PLC and recommend areas to improve. That is based on LO, right? That means it's examinable. When the LO comes here, mama කියන එක නෙමෙයි මේක in the syllabus as LO, right? Evaluate the role of audit committee in strengthening the control environment of this company. What can you say? Advise the main areas of interaction between the external audit and audit committee. That was covered in my slide. What are the things external audit should communicate? I told you that is about the qualitative aspects of financial reporting, that significant matters, scam, all of that is here. So please, can you comment on audit committee in this case study? Let's see what I've answers. Do you think they are good? Only 2 members are there. What else? Membership එක ගැන විතරක් comment මදියා. They are very easy answer. No number of members who are there. Those are very straight knowledge. But in depth, do you see audit committees discharging their role properly? Are you happy or unhappy? Those are the judgment you need to exercise from the case study information, right? So, no answers. Yeah, one says no internal department, maybe internal audit. Yeah. What else? Is it a problem audit committee? Huh? Then there are weaknesses in internal control. Okay. So what? So what do you say? Yeah, so you are there somewhat, but that is why, students, it's very important to structure an answer. ඇයි මේ ළමයි මෙච්චර විභාග ෆේල් වෙන්නේ? is sometimes not a knowledge gap, but their ability to articulate what you know, how you structure without writing hairy stories, concise answers, without wasting time to the point. Paper marker will be very happy. Wow, wonderful student, done, done, done. Right? So to the point. That comes when you practice that, right? Then nobody can question your success. Right. So from the present, also I'm okay. I'll come to risk committee separately. Yeah, there's a listing rule on the risk committee, but okay. Before I come to this slide, if I just tell you evaluation of audit committee, so I have put three things. So first of all, let's understand what is in corporate governance. Uh, you mentioned about members. Yes, there are three members. There should be three members, only two. Majority should be independent. At least one member with recent and relevant financial expertise. Don't you have a question? Just ask the question while there is FCA. Normally, after 70 years, his independence is questionable. He's 71. And we need to ensure Bhuvanaka is having that recent and relevant financial experience. You can ask that question. Chartered accountant can get quickly outdated, right? Unless you are updated. Yeah? So, uh, it says fellow member extensive financial oversight, very good, but I am referring to this in particular, the recent pronouncement accounting standard changes we need to ensure, and then above 71 you have to know. The other member is a legal practitioner, therefore this chairman you have to rely on, right? Much. Then, if you look at the main role, responsibility of the audit committee is to oversee accounts. But this company, look at the whole process of accounting in Excel, manual reconciliation, internal control gaps, manual journal entries, that there's a significant deficiencies, weaknesses, and external auditor has highlighted them. So therefore, the integrity of financial statements, right? Uh, uh, the internal controls, there is a serious question that audit committee appears to have failed on their main areas of responsibility, which is given in the corporate governance code. The other thing is for the audit committee to effectively work, audit committee can't come and check controls. No, either they have to outsource it or have an in-house internal audit. The case study is completely silent about it until external auditor says why all of these issues are not coming to the surface, right? So then internal audit part also is definitely very relevant overall perspective. Then if you look at the board of directors composition, that is a typical exam question in the past also. Now, this company's board members, I have listed out 11 board members. Out of 11, we can see about 4 are non-executive, right? Because how do we know these three are originally appointed as non-executive, right? And we know Bhuvanaka de Silva is age problem is there, right? And then from the beginning, there has been some independent directors appointed. And one member is not independent now. I told you maybe Prabhat because he has become CEO. So then overall, if you look at now, are you happy with the non-executive directors composition of this company having four? Is it enough? Let's see your answers now. What is your answer? Yeah, usually chairman should be chairman of a company. Now that's the point I want to get at, right? No, you are not answering. So my question to you, yeah, yes. So remember, in this company, chairman appears to be normally, now the corporate governance code says, if the CEO chairman, now here there is a CEO chairman split. But can you say chairman is independent? No, chairman is the founder, shareholder, and he is still actively engaged in the business. Probably executive. Then when the chairman is not independent, the majority of the board should be non-executive. That's the point you have to bring out, right? That's a very important point. And then in addition, you can talk about other director, this problem that I mentioned. So from a corporate governance perspective, student, please see this big change about the risk committee. Even the listing rule talks about the risk committee. In addition to audit committee, now there is a discussion about the risk committee. New principle says company should have a risk policy. Now this company may not have a risk policy, may not have a risk management framework, may not have a risk committee. If there is no risk committee, the entire board should take, audit committee should handle it, right? Entire board, right? Audit committee should handle it. Board should establish a risk committee. That's the requirement. If not, you have to give it to audit committee. And listing rule also says where listed entity do not maintain a separate committee to perform the audit and risk function, right? The audit committee shall additionally perform risk management function. Now, that is another point you can write in this answer. Do you think that this company's audit committee is handling risk management section as required by listing rule? Maybe no. That's another big point you can write in the answer, right? Then, yeah, I think these directors we spoke about, I already covered. There is one member appear to be non-executive, but we have to check whether he's independent. Uday Fernando. Hema Mali is the financial control executive. Sanjay Sunil Vasanta, they are the founders, probably executive. And Prabhat, Sunil Gomez cannot be independent now. So those are the points. And now we come to the last segment of our session. That is to talk about little bit about possible question from sustainability, right? Or IFRS or SLFRS S1 and S2, which is mandatory for this year. And you can expect questions. Last time also I told and it was tested. This time, why again we can expect? This is really hot topic now. So what you need to know, especially what examiner can ask. The last time I emphasized student, this is really possible. Board of directors role in sustainability, and then what are the other frameworks that are there? For example, if anybody applying GRI, integrated reporting, SASB standards, and how to apply the core content. In terms of core content means the governance, risk management, right? Governance strategy, risk, target, and metrics. How do you apply this? And then climate related risks. How do you apply? Especially, this is again risk, physical risk, transition risk, and opportunities, right? So I don't need to now cover everything. I have done a video. You can Google, it's in YouTube, right, on this one and S2. Please watch. But now, for the purpose of this syllabus, I will cover and I will also emphasize you some of the critical areas. So this is very important one, can be tested in your paper. How to apply transitional relief, right? Available in the standard. Especially, you need to understand these two, paced approach, right? As well as transitional relief. And please write this word proportionality principle. That's something very important. What do you mean by proportionality principle? Proportionality principle in S1 and S2, right? So those are really big topics. And first of all, we need to understand S1 is the mother standard, foundation standard. S1 talks about company has to disclose sustainability related financial information, right? So that's number one. So then what is number one? That is about one thing that is called SRRO, sustainability related risk and opportunities. Risk is negative, opportunity is positive. Look here, in hospital, if they say we are coming up with a green hospital, right? Everything is green. Even the medicines that are given, they are trying to do research and come up with medicine that has less side effect from organic. I mean, connecting to Ayurvedic with the Western medicine, something like that, is a new product they are creating, totally different product opportunity. In a case, in an environment where, and they will also promote that we are a hospital which has the lowest carbon footprint, come, right? And so like that, green products offering. So that's opportunity, SRRO. Then how do you know something is SRRO? Anything which is impacting your cash flow, cost of capital, or access to finance is SRRO. That's where the standard connect to financials. Imagine to run a hospital, what do you need? You need medicine, supply chain of medicine. And then you find that the relationship with some of the suppliers, there are frauds and all of that, and your supply chain is impacting, there is a disruption, that is SRRO, right? Why? SRRO, I will explain to you how SRRO originates. That's very important. Please write how SRRO originates. You know, first of all, what is SRRO? Now, for example, can hospital operate without water? Suddenly there is a water is not available this location, they can't run, right? So that is again SRRO. Why? Because you can't run, you can't continue your operation, right? It's impacting your cash flow. And then S2 standard is about climate risk. And if I go back to your syllabus and show you, climate risk include physical risk. What is the best example we can give for physical risk? Please write. There are two types of physical risk: chronic and acute. Chronic is chronicle. Within a day, what happened? After heavy rain, within 2 days, see the disaster, how it devastated number of people, families. That's a good example. This Ditwa, the cyclone, right? That's a what? Chronic risk. Acute risk is the long-term change. Now, why, even if you ask from ChatGPT why this cyclone came to Sri Lanka, now eventually it relates to climate risk. The sea level temperature goes up, sea level rise, and then how it forms cyclone. So finally, this standard is critical for future. Is accounting for planet future, right? So quantifying all of this impact in S2 standard, right? How physical risk is impacting your cash flow. You have to quantify what is the P&L impact. Imagine in Sri Lanka how many companies you can calculate in dollars, the export companies, how their orders were affected, how their stocks were destroyed. And it's not something that happened only this year, it is happening. It has happened in the past. Will it happen in the long term? You have to quantify and show. That is what this standard requires. And all of this is root cause is emission, right? Emission of 7 types. And finally, you convert to carbon dioxide and report according to greenhouse gas emission standard. The most toughest requirement in the standard, S2 standard, is to report your emission scope 1. Scope 1 is what you burn inside the factory. If it is a hospital, what they, if they run a generator, right, what they burn within. And scope 1. Scope 2 is the energy that you purchase from the Ceylon Electricity Board, right? Or steam if you are purchasing. If hospital now, so you have to purchase, you need steam, right? Then scope 3 is you have to account for your supply chain, your pharmaceutical people. Their scope 1 also you have to take. Now this accounting is very difficult. This accounting need to be done based on the what standard? GHG protocol. Please write greenhouse gas emission protocol. There are quantification. Now, if you are using your, say you are using your car, diesel, right? Well, how many types of, the types of emissions, the carbon dioxide, methane, you need to calculate per liter, right? Apply your energy intensity and apply the, the emission factor, and then report your emission, right? Scope 1, 2, 3. That's the most challenging thing. And fortunately, standard has given transition relief, the difficult one, your supply chain. There are 15 categories of scope 3. You are exempted. And because I talk about it, let me get into that slide. and which is the more like the essence of the standard is this. Now, this is what I spoke, right? S2 standard is GHG protocol. It's called greenhouse gas. Carbon accounting standard, right? It's called corporate accounting standard. There are three standards. So the main standard as well as scope 2 there is a guideline, scope 3 there is a guideline. And if you look at this, what the standard requires organization to report scope 1 emission, 2 and 3. Fortunately, standard has given these exemptions. For the first year you don't need to report scope 3. Until 2 years you are exempted. That's a transitional relief. For example, this one, there is a transitional relief, right? The other one is uh, other one, look at this diagram. It will give you the full thing, understanding. I told you scope 1 is what you burn within the company. Then I told you scope 2. Now these are the 1, 2, 3, 4, 5, 6, 6 type of emission, right? The carbon dioxide, the CH4, right? Methane, all of the nitroxide, HFC. So hydrofluorocarbons, likewise PFC. But remember, when you report all this, you have to convert to carbon dioxide, right? And then report. That's usually the practice. So if you look at scope 2, that is, I told you purchase. Scope 3, if you calculate, there are 15 categories and it is upstream and downstream. So upstream is largely your supply chain, right? And sorry, the yeah. Now here if you look at your supply chain, purchase goods and services, so in a hospital, this can be a larger portion, and even your business travel, how employees are coming to work, also need to be counted. And if you look at downstream, the distribution, the customer related parts, right? Now, in a hospital, you have to look at what are the scope 2, 3, if they have made some investment, right? Lease assets, the products, the waste, that waste is a big part. So likewise, transportation and distributions. So say ambulance going here and there, but that can even capture under probably scope 1 company owned vehicles, right? Now this is that. And then in addition, this S2 standard requires reporting. These two are very important. I told you proportionality principle and transitional relief. Another thing I told you, I was explaining to you, this is the last exam question, right? Evaluate board of directors role in implementation of S1 and S2, right? Very easy. So board has 5 hows. Every question start from how, right? So whether how the sustainability related responsibilities are included in the board charter, how board is going to get the competence, whether board is competence, if board doesn't understand emission accounting, what can they do, right? And then likewise, there are five requirements, whether information about SRRO coming to the board, are they discussing at the board meeting, right? Whether it is connected to board remuneration. So those requirements, this was tested in the last paper. And then I was explaining to you the basics of the standard, fundamental. Now let me to go to the point where I stop this one. I explained to you what SRRO means. And then primary users, you know, right? And then in addition, this is those 5 house, huh? Whether, see this, is it in the board charter, right? Skill and competency of the board, and whether this is coming to the board meetings, and how board is using this emission related things, climate things in board decision making, and how they oversee target setting. And then this is what I explained to you, climate related risk. You need to really understand physical risks, acute and chronic. Transitional risk means transition to a green economy. Now imagine if this hospital has set a target, by another 3 years, they are going to be completely green, net zero target. That means they will use solar, they will totally use renewable energy, right? Net zero target. That's net zero or carbon neutral target, right? So then in that What is the impact on financial statement? Your existing assets may be impaired, right? And likewise. So technology related risks are there, transitional risk. And then if you want to buy some of the equipment, the market, and there are regulations on those, so those are transitional risks, right? So all this is impacting financial statements. So that you need to be aware. Then final point that I want to tell you, now how SRR originates also very important. මේ ස්ටෑන්ඩඩ් එකේ essence එක ඇවිල්ලා ඒක fundamental එක දැනගන්න ඕන නම් standard, if you ask me, standard is about one thing. S1 is one thing, SRRO. Whole deals with SRRO. S2 deals with CRRO. CRRO means climate related risk and opportunities, right? Then if you don't understand SRRO, what to do? There is nothing to study, right? So remember, SRRO originates from two important things, three things actually, but two are critical. One is SRRO originates from the dependencies. Organization depends on water, right? Whatever resources they are dependent. Dependencies and relationship. Now, organization is relying on a supplier, where only one supplier, he goes bankrupt. So dependencies and relationship. Depending on natural capital, no, in integrated reporting framework. So without that, how you work? And secondly, the impact created by the organization, right? So that's how, there's one nice slide, I don't know, this here, how SRR originates. No, it's not here. So remember those two things, right? SRR originate from dependencies on two things, resources, relationships. Say no water, your cash flow is impacted. No supplier, you can't continue. Dependencies and relationship, one. Second, the impact. Organization is releasing wastewater and they can't now operate. So that is SRRO. And last thing is this proportionality principle is very, very important. This is a very important slide, right? Good news is, while this is very tough, why the standard is tough, you need to report emission, measure emission. Then you need to quantify what is the impact on your cash flow. What is the impact on your assets? You have to say if another hudhud or cyclone comes, which asset, which location those assets, what is the value of those assets, all in numbers. මේ ස්ටෑන්ඩඩ් එක නිකන් ඩිස්ක්ලෝෂර් වුණාට ඔක්කොම numbers වලින් දෙන්න ඕනේ. Quantification of present and future financial impact due to climate risk. You need to quantify physical and transitional risk. One student is asking transitional risk තාම තේරුන්නේ නැහැ. Right. Transition කියලා අපි කියන්නේ the entire world is trying to transit. Look at all the cars on the road now. BYD, most of the car. That is transition to a green economy, right? One bigger part. Now, why companies are saying net zero? We are going to all these lights we remove and put the sensors. Now, like that, you are replacing existing assets and you are getting to this net zero. As a result, some of your current assets are not to be used and you are introducing, there are restrictions comes in the market, carbon taxes are being enforced. All that is called transitioning to a low carbon economy. වෙනස වෙන්නේ low carbon economy එකට යනවා කියන එක, right? I hope you understood now. Transitional risk. Yeah, did you understand? Proportionality principle I am going to explain. So I hope you understood transitional risk. Will S2 link to penalty system to recover environmental? Yeah. So I told you S2, SRRO is about two things, impact created by the entity and then dependency. වචන දෙකයි තියෙන. එක වචනයක් dependency, දෙක impact. Dependency on two things, resources and relationship. This is very sharp knowledge. When you study a standard, you need to be very sharp on what the core principle is. Everything is connected on that foundation, right? So proportionality principle කියන්නේ මෙන්න මේ දෙකට ලොකු දෙයක් නෙවෙයි. Proportionality කියන එකේ meaning එක imagine a very small company. Now IFRS S1 and S2 this year top 100. In another 5 years time it will come to all up to all the SBE, specified business enterprises. Very small company, they what is this S1 and S2 climate risk, why it is important? How can we hire experts and hire sustainability managers, do all this system financial modeling? We can't do. So no problem, you are a small company, your emission is not that significant, so standard gives you relief. Do what you can do. The proportionality principle means these two, right? That is, one is when you present information that is limited to what is reasonably supportable and available. Please write reasonably supportable, available without much money, without undue cost or effort. Don't put a lot of effort. What you can, you do it without undue cost and effort. Reasonable and supportable information. Then if you can't quantify, qualitative approaches also allow, like describe, right? Because you don't have skill, capability, or you don't have resources to do, especially these areas. Now take scope 3 emission. Do what you can do without much money, spending much money. Then you need to do a scenario analysis. Now what is now in Sri Lanka, now we say one scenario is, now see, the expectation is rise of the warming to limit at 1.5 Cs, right? But imagine if temperature goes up to 2 or 3 degree, then planet temperature will really go up and then people can't work. So that's really impacting, right? So you need to do a scenario analysis, right? Do it based on the publicly available scenario. Now, if you Google IEA scenario, it tells you everything, right? They have done a lot of research globally and even Sri Lanka. Then calculation, the financial impact. Also, what you can only you can do. And you can do it qualitatively without quantifying, right? So like that, these two may table like a headers. This is proportionality principle. What are the main transitional relief, especially scope 3 relief and this quantification relief? Those are given. So IFRS standards you are briefing right now is not clear specifically how it related to pre-scene. No, students, please understand. මේ ප්‍රශ්නේ pre-scene එකෙන් එනවා කියන එක නෙවෙයි මං කිව්වේ. This is in the syllabus. Examiner if test will ask very basic questions. දැන් මම මේ කියපු ටික හොඳටම ඇති. Right? So I told you last batch, one possible last pre-scene discussion also, one possible topic is board of directors role. So there are just 5 things. It's there in the standard. Open the book and write those 5. And they can ask you proportionality principle, transitional relief, some basic questions, right? See, this is a pre-scene discussion. I'm not here to do S1 and S2, but I spend some time to give you, create an interest where you will learn this, right? And if examiner can give you a separate question also on S1 and S2, maybe like last time also it didn't come. It can come, they can just give you 3 lines. This company is top 100 and they are going to apply, explain the proportionality principle and relief. 5 marks. Question like that. Don't too much worry about it. So I hope this session was useful, right? So my objective is not just to read the pre-scene, but I equipped you wherever possible with the knowledge. And remember, this is a very decisive, critical examination, right? Because syllabus is changing, I'm sure. You don't need to worry about new syllabus. All of you will pass, and this will help you to get the maximum, and especially those who wish to be the prize winner, don't forget this segment where you can go easily up to 30, 40 marks, right? If there are no other questions, I can conclude the session. Thank you very much. And stay happy, right? Any other questions? Right. Thank you.